It's long-term what?
Okay, let's get started. Do you remember Cheers?
Afternoon, everybody.
Great show. EquiTrust Bridge is the Cheers of long-term care policies. Everyone's welcome, even if you're not in perfect health. This annuity long-term care policy launched in 2022, and the big headline is simple: you're guaranteed approval. Most hybrid policies I review combine life insurance with long-term care coverage, and Bridge is different. It combines an annuity with long-term care coverage instead. It may be a good fit if you have health issues, want a larger refund for your heirs if you never need care, if you're in your 70s, or you already own a life insurance policy or annuity that you might like to transfer. One drawback is that you have to fund the policy with a lump sum, a minimum of $50K, instead of smaller payments over time. But if you never need care, that money is usually returned to your heirs. Before we dive in, this was recorded in 2026, and policies get updates every few years. So check the link in the description for any changes. You'll also find star ratings for how Bridge stacks up against other top policies. So first, let's quickly talk about some of the standard benefits that come with modern hybrid policies. Your benefits kick in when you need help with two basic activities like dressing or bathing, or if you have cognitive impairment like Alzheimer's. From there, you're covered for care at home, in assisted living, in memory care, or in a nursing home. You can add inflation protection so your benefits grow to help keep up with rising care costs. And because this is a hybrid policy, the policy is combined with an annuity. You can get paid in three different ways. If you do need care, it pays benefits. If you quit the policy, you can get some money back. And if you never need care, your family gets money back. So either way, someone's getting a check. Which brings us to refunds. If you never need care, your spouse or kids can receive your premiums back, sometimes even more than what you paid after you pass away. So is this insurance basically free? Not exactly. You could have earned interest on that money elsewhere. But getting your money back, sometimes with growth, is a nice perk. Now let's talk about what makes this policy special. Well, first, like I mentioned, everyone qualifies. Seriously, most policies can decline you for health reasons, but EquiTrust has no medical exam, no review of your medical records or prescriptions. Instead, you answer 5 questions like, do you use a wheelchair, or do you have this specific cancer? Check the link in the description for all the questions. Then you complete a short video evaluation. You may be asked to stand up from a chair or complete a few simple mobility and memory tasks. And that's it. You'll quickly get a result placing you into one of 3 rate classes. So what are rate classes? Well, since everyone qualifies, your answers and video evaluation are used to determine how much coverage you receive. There are 3 rate classes: preferred, standard, and secure. And in simple terms, healthier applicants usually qualify for preferred, and applicants with health issues may be placed in standard or secure. Now, based on your rate class and your age, EquiTrust assigns you a coverage ratio that determines how much care coverage you receive. So what's that? What's a coverage ratio? Let's say your coverage ratio is 300%. If you fund the policy with $100,000, you'd receive $300,000 in long-term care benefits immediately. That's the value of getting this policy. Now, like any policy, there are additional details. For example, some benefits take a few years to fully vest, so just check the link in the description for more info. Another nice perk is cash indemnity. Many long-term care policies pay via reimbursement. You submit receipts and you get paid back for your care expenses. EquiTrust uses cash indemnity. Once you qualify for benefits, you can receive the full monthly benefit even if your care costs less. For example, if your monthly benefit was $5,000, but your care was only $2,000, a reimbursement policy will only pay you $2,000 and then the rest potentially later. Cash indemnity pays you the full $5,000 right now. You don't have to submit receipts, it's less paperwork, and because it's cash, it's very flexible. You can pay family members or caregivers outside of an agency, or you can even save unused benefits for later. Bridge also offers flexible funding. You can spread payments over the first 5 years, starting with a minimum initial payment of $50,000. This policy can also offer high refunds. If you need little or no care, your heirs may receive back some or all of your premiums. You can choose for your money to grow at a fixed rate, currently at 5%, or be linked to an index like the S&P 500. Just remember that growth is not guaranteed. Big picture, this is a really interesting option for a lot of people. If you have health concerns or you're in your 70s, this policy could really be calling your name.
Cheers. Yeah, just a sec. Is there an Annuity Pantuso here?
That's you, Coach.
Speaking.
There are a few additional details that I didn't cover in this, so please check the description if you want to learn more. But keep in mind, if you're younger and healthier, a life hybrid policy will usually offer higher benefits. At Long-Term What, we sell policies from all the top insurers, and we can help you find the one that fits best. I'm Jesse, and this is Long-Term What? If this helped, share it with someone who needs it, like it so more people see it, and subscribe for more unboring long-term care tips. To request quotes or to learn more, visit longtermwhat.com or see the links in the description. Thanks.
Afternoon, everybody.